In the past year, security tokens have come to the forefront of most regulators, investors, and crypto enthusiasts' minds. But what is a security token? How do they work? And are they legal? Keep watching to find out more. Security tokens. Security tokens are essentially digital assets akin to traditional securities like bonds and shares of ownership in a company. They represent partial ownership of an asset that's sold to investors in order to raise capital and give them a return on investment. The value of these security tokens is derived from the underlying asset, meaning that people can buy, sell, or trade them on secondary markets. This type of tokenization can be applied to any type of physical or digital asset: real estate, commodities like gold or oil, precious artworks, intellectual property, IP, etc. What all these assets share in common is they have monetary or exchange value. This means that if you own the underlying asset itself, you likely also have rights over it, such as voting rights for shareholders, which are transferred to the owner of the security token. In addition to fractionalizing ownership into divisible units of many different sizes, 1%, 10%, 100%, security tokens provide a host of benefits over traditional securities. Instant transferability and liquidity enabled by blockchain technology. Data protection through encryption. 24/7 trading capability. Reduced transaction costs due to digitization, in theory. Legal compliance and transparency through smart contracts built into each token, etc. Legality. You may have heard that security tokens are a legal gray area, but in the United States, this is not really true. The legality of your security token depends on how and by whom they're being issued. Simply speaking, if you're planning to buy or sell security tokens in the US, they need to be registered with the SEC. If the token is not registered with the SEC or exempt from registration, then it will be illegal for you to purchase or sell it as an investment. This is not necessarily because regulatory bodies believe that all cryptocurrency is inherently a security risk, but rather because non-registered tokens are believed to pose too great of a risk for investors. Until these factors change in favor of investors, or until this type of classification is removed altogether, it's unlikely these types of crypto will become more widely available without passing through necessary regulatory hoops first. Conclusion. One of the biggest problems facing startups and investors is the regulatory uncertainty that plagues the security token market. Different regions are taking different approaches, and people in the US have to deal with so many different regulators that it can be an overwhelming process. At Brett Real Estate Tokenization, we are conducting security token offerings, STOs, backed by the US real estate industry. By issuing shares that represent fractions of real estate and converting these shares into tokens, individuals can effectively invest in assets from as little as $1,000 on our platform. As a digital security, these tokens will entitle their owner to regular dividend distributions from the rental income of the properties they invest in, as well as from the valuation of the real estate market in general over time. For more info, head to our site today. And if you enjoyed this video, be sure to like, comment, and subscribe.